We getting paid, we getting paid, huh? Stacking that money from the trades, huh? I really do this, I really trade, bro. Hit the markets for $1 million, then I'm laying low. Like a pro, yeah, I'm trading like a pro. Taking profit like a
Girl Money Investor. This is my first official YouTube channel, and I'm so excited to be able to share my knowledge and my experiences with you guys. Today we're going to be talking about trend in the market and how to identify and find these trends in the market. But before we go into that, I want you to remember that you will be blessed going in and you will be blessed going out in the name of Jesus, okay? So let's get started. Here's a couple of links right here, and I will be posting these links below. Okay, let's talk about it. What is trend in the market? What is consolidation?
How do I find the trend in the market? RSI, Sarcastic, Oscillator, EMA.
I got you. Okay, let's talk about a couple of trade types. What is a swing trade? The swing trade is typically when you're in a trade for a few hours versus scalping when you're going into the market on a very fast time frame, like 15 minutes, 5 minutes, 1 minute, and you're scalping the market, getting those little pips to be, you still following trend, but on like a smaller time frame. So you're scalping the market in and out, going in and out the market fast, and that is scalping. I just want to be very, very clear. Medium trade is typically when you're in a trade for a few days. So I'm going to sit in this trade from Monday to Wednesday, and then God gonna bless my pockets because He said He will. And I believe in God, and I believe in Jesus Christ. And if you believe in Jesus Christ and you believe in God, have faith. I promise you. Because I love using the EMA indicator, the exponential
Moving average.
So on a 4-hour chart, I typically use the 50 EMA moving average. On a medium trade, I typically use the 20 EMA moving average. And swing trade, I use the 200 EMA moving average. And the scalping, I use the 100 EMA moving average. But if I'm honest, I use multiple EMAs at one time. So I have a chart and I have the let's say a 4-hour chart. So I have the 50 EMA and the 200 EMA, and then boom, I'm on my 15-minute chart. So I'm having my 20 EMA and my 100 EMA, and also y'all my 10 EMA. I like my 10 EMA. So here I have my Euro USD chart from TradingView, and you're going to see that it is a Heikin IG candlesticks. Some people use the regular candlesticks, which is totally up to you. What works for you, stick to it. Stick to what works for you. Remember that. And here you're going to see my 50 EMA. And the 50 EMA line, it typically just shows when like your entry points, your entry and your exit points. Literally, it shows you, okay, the trend is in the uptrend. It shows you the trend is in the downtrend. It shows when you should be doing sales, buy, puts, and calls. Use your EMA. Okay, on the slide, how do you find a downtrend using the 50 EMA indicator? Okay, I'm going to show you. So the downtrend, you're going to know when it's going into a downtrend when price is below the line, the 50 EMA line. And when I say price is below the 50A line, I'm going to show you. So right here, the candlesticks, you see the second red candlestick below the 50 EMA. Listen, the second red candlestick below the 50 EMA line is typically your entry point into a downtrend. Do you copy? Okay, and so on an uptrend, it's using the Heikin IG candlesticks. It's usually when price is above the 50 EMA line, the second green candlestick above the 50 EMA line. the second green candlestick above the 50 EMA. Not touching the 50 EMA, okay? And I'm saying it loud because I had to scream this to myself so many times. As soon as it touched the 50 EMA line, I'm like, okay, I'm gonna enter into the trade. And next thing I know, guess what? Reverse. And I'm like, no. So let's just follow the rule above the 50 EMA line. The second candlestick, the second green candlestick above the 50 EMA line, guys. And that's when you enter into an uptrend and you make that profit, okay? How to identify when an uptrend is over. Okay, guys, let me tell you this. So for me, I like to really focus in on my candlesticks, because when I want to know when an uptrend is over, typically if you use a candlestick cheat pattern chart, I use a cheat pattern chart. Okay, I'm guilty. But when I use my cheat chart, it allows me to see that this candlestick, this green candlestick next to this red candlestick that's in this close and this opening, and this is the closed top red candle right here, and right here is like a very consolidating looking candle, right? And so boom, it tells me that this trend is about to go in a downtrend, because one, I have my I'm going to enter it down below so you can get the cheat sheet too. We are going to make profit, okay?
Okay, how do I know when a downtrend is over? So I'm going to do the same thing. I'm going to use my candlestick cheat sheet, and I'm going to like zoom in on my chart. I'm going to say, okay, this candlestick is going above the 50 EMA line, and the candlestick pattern says that this is the indicator saying that it's going into an uptrend. So that means my downtrend is over, and so I'm going to wait until my 50 EMA, my second green candle, is above the 50 EMA line, and I'm going to go into an uptrend because now my downtrend is over. And that's the same way when, like, you know, it's just like reverse. Okay, reverse method. Downtrend, reverse method for uptrend, reverse method for downtrend, if you get what I'm saying. I hope I'm not confusing anyway.
Okay, what is consolidation? Very simple. If your candlesticks are not above or below the 50 EMA line and it's in between, like the 50 EMA line is between the candlesticks, that is consolidation. You do not enter into a trade
when it's consolidating, because you have a high chance of losing your money. And we don't want that.
Yeah. So consolidation is a no-no zone. That's what I call it. I call consolidation a no-no zone because the trend is trying to find direction in the market, and so it's going up and down. There's a lot of fluctuation. So just do not trade. Wait till you have an entry point, and then you go for it.
You go for it, okay? No consolidation zone, okay? Okay, stochastic oscillator indicator. I use the stochastic oscillator indicator to help me find trend and movement in the market. I want to follow the direction the market is going, and it has the K line, which is the main line. It has the D line, which is the period moving average. I typically set my K line to green, like the color, as far as the colors, to green, and to my D line I set it to red. And with that, it allows me to see that if the green line is above the red, I am in an uptrend. If the red line is above the green, I am in the downtrend. So with my stock indicator, it also allows me to see, okay, look, the red is above the green, and it's going down like from the overbought 80 to 30, right? So if it's going in the uptrend, it's typically going to hit that 30 line, or even sometimes the midline, and the blue is going to be above the red, and it's going to be in an upward direction going towards the overbought direction. So it's going from oversold to overbought, uptrend, overbought to oversold, downtrend. Just remember that. And that's why I love the SO indicator. That's like what's the first indicator I learned how to use, honestly, when I was trading. Okay, the stock oscillator input setting. This is the usual setup where the K period is set to 5 and the D period is set to 3. And some of them include like a smoothing period average or whatever, and that would be also set to 3. But for me, On the main line, I always turn it to green, and I always keep my signal red because it allows me to see if the green is above the red, I'm in an uptrend, and the red is above the green, I'm in a downtrend. So you can adjust it. I also will include the formula below so that you can use this formula to help you set up your charts. Relative strength index, last but not least, I use the relative strength index to find direction and movement in the market also. How do I use it? Okay, so if my line is on the oversold line, the 30 line, I know that once it hits this line, it typically goes upward in an uptrend direction. So I'm waiting for it to go up. So once the price moves up above the 30 line, I enter in an uptrend on the green calendar using my EMAs and all my other indicators to make sure every entry is right. Okay? And then when it goes to the 70 line and it hits the 70 line, I'm waiting for it to go down. So if it hits the 70 line, go below the 70 line, I'm going to enter into a trade because I expect it to go down. But let's say it goes above the 70 line, so it's overbought. You can still trade if you know what you're doing in this zone. But if you're like a new trader, be safe. Okay, thank you guys for watching my presentation, my PowerPoint. I am super excited. I hope you guys learned something. If you have any questions, please ask. And please comment, like, subscribe. Tell me what other videos I should post. I am so excited that I was able to share this with you. Over here, I have a few platforms that I've used. I love TradingView. I love doing my analysis on TradingView. Like I'm like Team TradingView over here. But I also love Webull, especially using like stocks and crypto. I love Webull, but MetaTrader 4. I tried MetaTrader 5 and no, but I still love MT4 and I just can't get over it. I don't know, y'all. But thank you for watching my channel. Be blessed. I love you. God love you. Jesus love you. You know.